Good morning, Pak Ziki. Assalamualaikum warahmatullahi wabarakatuh. I'm ALED, the MBA student of SBM ITB. Today, I would like to welcome to this presentation on energy sovereignty versus energy efficiency. We are going to analyze the strategic trade-off between the price controls, economic resilience, and the long-term sustainability in Indonesian's energy sectors. Okay, let's start by looking at why redefining energy sovereignty is essential for us. I mean, it's for Indonesians, fiscal health, and the green transitions. As we can see on the left-hand side of your screen, maybe you see our current reality of fossil fuel dependence driven by fixed price controls. So this creates a high fiscal burdens and the lift of leaves us vulnerable to global economics shocks. So we urgently need to make a strategic pivot across the bridge toward a renewable future. By shifting our approach, we can achieve a long-term sustainability and enhance our energy security, and finally, and unlock the new economic opportunities through accelerated green growth. And then this like I explained before, right? This brings us to the critical conflicts. Currently, sovereignty is defined simply as price controls, but in Indonesia, is now a net enforcer with rising demand. This mismatch creates several characters. The several structural fragility. The cost is massive, estimated at around 113.5 trillion rupiah. So in total, energy support for 22-24. This poses a huge pro-cyclical risk, meaning our fiscal our fiscal space evaporates exactly when the global crisis hit. The solution requires three major shifts, moving from universal subsidies to targeted cash transfers, moving from the price suppressions to market signal with the safety nets, and the shifting from the carbon lock-in to the renewable investments. So, to understand how we got here, we have to look at legacy of price controls. Defining sovereignty as keeping price artificially low is a legacy of an oil export era that no longer fits our net imports reality. If you look at this chart, you will see a critical inflection point marked by the red dashed line at the year 2024. In the past era, as of oil surplus, surprising domestic price was a farm wealth distributions. Today, in our era of import deficiency, keeping price low means that the state of budget is essentially subsidizing imports. So to put this in perspective, our net import spending reached 35 billion US dollars in 30 and 32. And then this brings us to the core of debate between two competing definitions of sovereignty, right? The status quo defines sovereignty as a control. So we're talking about the how we manage, we control, and the affordability, relying heavy on the administrators of the prices and universal subsidies. However, the outcome is heavy fiscal burden, overconsumption, and high import dependency. So we propose a shift to dividing the sovereignty as efficiency by focusing on the optimizations, market signals, and the targeted social protections. The outcome is vastly different. We achieve the resilience, economic competitiveness, and the sustainability growth. So the real trade-off is not between the sovereignty or efficiency, but rather whether we pursue the sovereignty through price subsidies or structural reforms. So, um, why is the status quo so dangerous? Let's look at the cycle of the fiscal trap. So we defining the what happened in the fiscal trap, right? When the global energy price spike, the gap between the government's administered price and the actual market price widens. So consequently, our subsidy bill exploded, pushing totalized support beyond the 300 rupiah. So this leads to a dangerous, we call it the crowding out effect. Crowding out effect, right? Well fit a budget for the infrastructures and the hard ass lessons just to pay for a cheap fuel. There is a tragic fiscal asymmetry here. When the global prices are low, the urgency to reform the fights is away. But when the prices are high, reform becomes a politically impossible. Yeah, as we can see, beyond the massive fiscal costs, there is a fundamental issue of fairness. Universal subsidies act as a leaky bucket. Disproportionately transferring public wealth to the high income households. As you can see from the pyramid breakdown, the largest beneficiary are wealthy owners of cars and the large home. Middle income users to get a moderate benefit, while low income households who of just done even on vehicles receive the smallest solid benefit. As the saying goes, resources intended for the poor are captured by those who do not need suburbs actually. Yeah. Uh, from an economic standpoint, artificially low price severely distort the market signals. By pushing price below the equilibriums, we create we call it a how to say it, that white loss, or a total or a total loss of economic efficiency. So this created two major market failures. First, subsidy reduces the private cost of the energy well below its structural cost, masking negative externality like pollution and carbon emissions. And then the second, it's create a moral hazard. It's mean the moral hazard is mean there is a zero incentive for the customer to conserve energy or invest in efficient appliance. So ultimately, subsidized price decouples consumption from its environmental consequences. And then, if we're talking about the impact on the macroeconomic stability is equally alarming. What this means, energy pricing interact directly with the exchange rates to create a, we call it a twin deficit risk. So this is our massive $35 billion oil import bill drive the current account deficits. Similarly, our high subsidy bill drive a fiscal deficit. These two deficits interact, feeding into one another's and ultimately weakening the how to say it our currency rupiah. As the rupiah weakens, so the imports become even more expensive, starting the cycle all over again. So ironically, policy means to ensure energy sovereignty, but they actually expose Indonesia to greater external exchange risks. I mean the greater Indonesia for the exchange rate risk. Okay. So why is reform is so difficult? The inverse lies in the policy paralysis caused by conflicting institutional mandates. as we call as we know it's in Indonesian, so how to say it, so drama, right? So the Ministry of Finance demand fiscal discipline, creating tension with the politician and the Ministry of Energy, who want to maintain social stability through the low price. Meanwhile, our Bank Indonesia is focused on the controlling inflation. So they focus on another perspective. Caught in the middle are state owned enterprise like PLN, Pertamina, who face the several balance sheet stress because the government's delay pay them compensations for keeping the price low, which hinder their ability to invest. So, furthermore, subsidizing fossil fuels fundamentally undermines the economic case for renewable energy investments. We face a massive contradiction. Our national target aims to for 20 sorry not 20 23% renewables, but the cheap fossil electricity completely kill the price signal for the green energy. So investors face an extreme risk in here. They're asking maybe they will asking why invest in the green energy with high upfront cost when the incumbent carbon energy is heavily sponsored by the state. So this is crazy. So to move forward, so policymakers must not negative, sorry, navigate the five complex strategic trade-off. First, balancing the short-term affordability with the long-term fiscal sustainability. And second is balancing coal phase-out goal with the resulting pressure of the energy tariff. Third, introducing the carbon price without destroying our industrial competitiveness. I think this is the third one is very important because we don't make another remix when we're doing something. And then the fourth is managing the energy transition while ensuring the energy security. And lastly, balancing political popularity with economic credibility. Okay. Um, this slide we're talking about the navigating the this trade-off requires a massive paradigm shift. So we must redefine the sovereignty from the price operations to the productivity and the resilience. Under the alt sovereignty, the state absorbs all the risk to keep nominal price low, which lead to high import dependence. So new sovereignty means aiming for the high energy productivity, establishing price that actually reflect costs, while the state protects the vulnerables, and utilizing the domestic renewables to reduce our reliance on imports. Ultimately, true sovereignty is not controlling the price. So when we're talking about the sovereignty, it's not about the controlling the price of the import oils, but it's reducing the need to import it. So sovereignty means that we not the controls price again, but how to say it, rebalancing, how we reduce our dependence to the imports. So this is what the understand sovereignty in the energies. So how do we actually achieve this? Last week talking like a professionals, but how we execute. This is the idea. Maybe this is I don't know if this will be fit or not, but we trying to defining the policy and let it we test in the markets. So our first key policy is to replace the blunt price instrument with the prices targeted social transfer. We must gradually load energy price closer to the market rate. Then, through the data integrations using a social registry, we can accurately identify our vulnerable populations. So, Finally, we recycle the budget savings into direct cash transfers or BLT. This stops the leaky budget, preserve price signal for the wealthy, and drastically lowers the visa cost per beneficiary. And the second policy is focus on the structural reforms need to the build a viable sustainable energy sector, resting on the three pillars. First, automating the pricing. What this means, using the smoothing bands to allow gradual price adjustments, which remove politics from the energy pricing. So if we're talking nonsense, we want to doing the sovereignty, we want the energy efficiency, but the political behind is very, in Indonesian, very dramatically, we cannot achieve. So we remove politics from energy pricing. This is important. And the second is cost-effective tariffs. We must ensure the state of enterprise like a PLN can cover their costs to restore balance sheet health for the future great investments. Third, greater carbon pricing, introducing the carbon tax and using that revenue to the fund energy efficiency initiative. So, yeah, finally, we on the last slide here, the fact that true sovereignty, which requires aligning our fiscal, social, and then energy policies. Immediately, we must increase transparency in the social registry and frame this reform to the public as a matter of fairness. So this is the key point, the importance. When the government want doing something, it must be clear communicate to the publics what they want to do and then what the effects. So in the short term, we will launch automatic pricing bands and targeted the cash transfers. In the medium term, we must implement for carbon pricing and define great investments through financial health state-owned enterprise. I will leave you with this core message. Efficient pricing is not the enemy of the sovereignty. It is the foundation of it. So, by shifting from the universal subsidies to targeted investments, Indonesia secured its own futures. Thank you.